Hi there folks, welcome to this week's weekly trade ideas, weekly review. It's Monday the 15th of February. Okay, let's get straight into it. We are in a big classic case of risk on at the moment. Risk on, for those that don't know what that means, it basically means investors, hedge funds are taking on more risk, and they take on more risk usually by buying the stock market. Stock markets are at all-time highs. Risk on has its knock-on effects into the currency markets as well. So we're always looking at the different states of the market. Are we risk on or are we risk off? So let's have a quick look and see what our picks are for this week. Okay, so the boys here, myself, we're looking at buying the cable. Cable, that's basically the nickname for the British pound against the US dollar. Why is it called cable? Because there used to be a big cable running across the Atlantic between those two nations, showing prices as the markets were changing. So cable has broken through some key levels of resistance to the upside. The markets are now all eyeing the next crucial level, which is basically 140. Belief is, of course, is that the UK are accelerating their vaccine rollout, which basically means that the economy could actually be kickstart faster than the other counterpart economies as well. So the pound is getting bid across the board. We're buying it against the US dollar. US dollar is basically trading lower as we move on to risk off, the safe haven currency. Maybe the US dollar is losing its appeal. So we're buying cable. Also looking at the Aussie against the yen. This is a classic case of a risk on currency. The Australian dollar is a commodity currency. Basically, it exports iron, steel, and so forth. Now, when economies are growing, basically, then there's more risk being taken. Economies such as China, basically, they need to import all these raw materials from Australia. So Australia dollar normally gets higher in times of risk on, and that's basically what we're seeing at the moment. It is one of the strongest currencies out there. We've got Australian employment data later on in the week, which may be a good decider on where that currency goes in the short term. More about that in a moment. And the Japanese yen, that normally trades lower when you have risk on. It is a low yielding negative interest rate. It's very cheap to borrow and then sell on the markets to buy the currency of the stocks and of the risk on assets. So typically risk on sees Aussie strength and Japanese weakness. Okay, so looking at the CAD yen, that's my pick for the week. Again, Canadian dollar is being buoyed up at the moment by oil prices. Oil prices surging through $60 a barrel, and this doesn't seem any let up in sight. So as oil prices go higher, so normally does the Canadian dollar, because of course Canada, big exporter of oil. So we're looking at buying the CAD and selling the Japanese yen for the reasons I've just mentioned. A low yielding currency, risk on tends to push the yen lower. Okay, and Paul here, he is looking at a sell in gold. He's looking here at the relationship between the risk on and risk off. Typically, they've been moved. They move opposites to each other. So as the stocks go higher, the gold comes back. He's expecting now that correlation to take place or to re-emerge, because it has been actually more correlation in recent times. But he's expecting that correlation now to basically go the way it's been in the past. Risk on basically means stocks get bought and gold gets sold to pay for it. The safe haven of gold basically is diminishes as people take on more risk in the market. So gold, he's looking at a sell. So there you are on that one. Max is looking at the Euro stocks as well. He's got a position there, not a position, he's got a target there of 38.52. It's completed a 4-hour entry, confirming a breakout from the supply and demand zone. So Max is talking about that. Of course, any of these setups, ideas you see, you can always come and talk to us in the trading room, as you well know. Okay, so let's have a quick look at this momentum meter. This is the momentum meter that I rely so heavily on when trading the Forex markets. I don't know how anyone trades the markets without looking at something like this. It basically tells me what currencies are strong and what currencies are weak. And I'm a trend follower, so I want to buy the strong currencies typically, and I want to sell the weak currencies. Anything above the line, the way that it's moving, is deemed to be a strong currency. Anything below, moving down, is deemed to be a weak currency. Just look here, what I've been talking about. You can see the Canadian dollar, that's the purple line, and the Australian dollar, those are the risk on currencies. They are getting stronger. They've been moving up for the last couple of trading sessions and are now a couple of the strongest currencies. And you've got the pound up there. Pound is flying. That's the white line. Pound is one of the strongest currencies. Well, you can see it is the strongest currency out there at the moment. So buying the pound against the currencies that are trading lower. You see the green line here. That's the cable. Greenback. That's why I've coloured it green. Basically is trading lower. But look down here. This one here. Yeah, that is the Japanese yen. So the Japanese yen is under pressure at the moment. This is the risk on play that I am talking about. Okay, and also you've got the red line in there. That's the Swiss franc. Swiss franc, also another low yielding currency, and tends to underperform in times of risk on. And you've got the euro in there at the moment, pretty much flat. So we like to buy strong and sell weak. You should really be looking at something like that. We've also got on the website, actually, something you might want to check out is a heat map. Let me see if I can just pull this up now. So if you go to the forexsignals.com website and you scroll down to the bottom, it's absolutely free, you don't need to log in. If you scroll down to the bottom, you'll see all these free tools that we've made available. And one that I particularly like, we just added it more recently, is this currency heat map. So I click on that and it pulls up this really cool heat map telling you again what currencies are strong, which ones are weak. Obviously the different colours. If it's dark red, then it's a strong sell. If it's a dark green, it's a strong buy. And of course the indicators, the tools down there. So you can get this as well. It's absolutely free. As I say, forexsignals.com, just scroll down to the bottom and you'll see all that. While I'm on this page, I'll tell you what I want to do is just go to the economic calendar, which is here, and we can then discuss again the opportunities that might happen this week, because there's quite a lot of news out this week. Okay, so here if I just go to the 7-day outlook and then scroll on through, we got Wednesday being quite a big day for the UK in terms of inflation data. So here we've got PPI, that's the producer price index. You've got the RPI, that's retail price index, and you've got CPI, that's consumer price index. Look, big inflation day in the UK on the 17th, which is Wednesday. So we need to keep an eye on that. Let's see indeed if there's going to be a follow through into the strength of the British pound with some inflation data coming out of there. So that's what we're looking at there. Also later on in the week, we've got some retail sales out in the United States. Retail sales, there you go. That is on the 17th as well, on Wednesday. That's an important number, retail sales, because it basically tells us of people spending money. And if people are spending money, the price effects normally are, showing, well, might show signs of inflation. So we keep an eye on what's happening on the high street. Are people buying? Are people spending? If they are, prices may go up. If prices go up, that's inflation. And you know what happens if we get an economy with inflation? The central banker has to raise interest rates. And of course, where interest rates go, so should the currency follow. So we will be paying attention to the retail sales later on in the week. And later on in the week, we've got the Eurozone PMI data. Now, PMI stands for Purchasing Managers Index. It is a key economic release that we look at when we are evaluating the currency strength. Okay, basically it's a survey that's going out all to the business leaders, manufacturing services, asking their sort of outlook on the economy going forward. If they're optimistic, they're hiring more staff, they're investing more in plant. So it's a forward-looking indicator, and the central bankers love looking at PMI data to give early clues of optimism going in to the economy. The reason why we're interested in all this again is because if the economy is booming and everything is looking positive and inflation is looking as though it's edging up, the central banker has to move interest rates. And if central banks move interest rates, again, that's when the currencies should follow. So we are going to keep an eye out on the PMI data, which is out later on in the week. So that's basically the economic calendar. So you can get that on the forexsignals.com site. Just scroll to the end there. Lots of free tools down there as well. If you are inclined, you can look at here. We've got profit calculators, we've got the heat map I've spoke about, you've got the weekly report, which is this, you've got the profit lot size calculator and so forth. Again, it's all free, just scroll through and away you go. Okay, so we got a lot going on this week in the markets, in the gold markets, in the stock markets, and of course the currency markets as well. So it's all a case of risk on, risk off at the moment. The stocks are, as of Monday at the moment, flying out of the gate, hitting all-time highs. You've obviously got the vaccine rollout going across the world. In the US, of course, you've got the stimulus package being agreed there. So all this positive news is having this positive effect on the stock markets. It's risk on, so you can trade your currencies accordingly. If you want to come over to the trading room, you can indeed. Just come and say hi. Let me know that you've come in from this video and say hi. I'll roll out the red carpet for you as well. If you're not, then no problems. I will see you next week. Have a good week.